Hey, Paul Mauro here, Smart Financial. Welcome back. Thanks for subscribing to the channel. If you haven't, do it now. Just mash that button there. Reach out to us on email. Go to our website. Follow us on Facebook and all that. If you want a free copy of Smart Financial Grandparenting, my first book, or Smart Financial Longevity Planning, my second book, please let us know. In about, I'd say, a month or two, the third book is coming out in the trilogy. These are for 3 different generations of people because the problems are really different. Our smart financial wealth building is really for those millennials, 25 to 35 years old that are just starting to save up some money and not appropriate for the topic we're going to talk about today. In the smart financial longevity group, those are the ex-geners, hitting to be about 60 years old. They have some of these issues. This is going to be important to them, what I talk about today. And then, of course, smart financial grandparents, which are the ones that want to preserve the most money they can for their kids and their grandkids, which of course means not wasting any money. So let's solve this long-term care issue once and for all. It's a huge stress ball for everybody. Long-term care is going to happen to 3 out of 5 people. That means you're going to end up in a situation sometime in your life where you can't take care of yourself totally, or your spouse can't do it, and you're going to need to have help. People that get paid, either in your home or in an institution. Now, you can talk all around the circles of this, but it's going to cost money. And it's not a problem for people that have a super amount of wealth. We work with folks that can just write the check. They can buy their own nursing home. Right? This doesn't bother them. And also, we have worked with some families of very modest means over the years, and they don't have to worry about this either. There's a Medicaid program for them. And again, Medicaid is a program that has an income and asset qualification. Medicare is the program everybody gets when you get to be 65, so you can get that lifetime healthcare coverage through the government called Medicare. Now, believe it or not, there are people in Washington that don't understand the difference between Medicaid and Medicare. It's another topic. Medicaid is not the kind of person that has to worry about long-term care. Medicaid will pay for long-term care, and they will be taken care of. It's really the middle-class millionaire that we need to talk about. It's our clients that have $2 to $5 million, where, $1 million is a lot of money to them. Having been through this myself, my brother and I had an 8-year long-term care experience with our parents. We know exactly what it costs. Here in New England, very easy to vaporize $1 million doing long-term care in the home and then eventually in an institution. So let's talk about how you take care of that. I'm very disappointed in the insurance industry. Most people are. They did a terrible job of pricing long-term care insurance policies. Many of the people that bought policies 20 years ago saw their premiums go up 10, 20, 50, 100%. And it's really not fair when someone's 80 years old and they can't qualify anymore to tell them that we're going to take your premium from $5,000 a year to $10,000 a year. And if you don't like it, cancel your policy. This is classic insurance company behavior. Right? I've worked with them for 50 years. Let's keep in mind, folks, they're not our friends. They're selling a product. Every single product they have is just a reason to get money into their coffers to invest elsewhere. They're not terrible people, but it's not a charity and they're not your friends. So let's be realistic. The long-term care insurance industry, traditional industry, it's got a lot of problems. I don't know when it's going to be solved. I don't know who the great mathematicians are going to be that figure out what the real morbidity is and what the real expense is. But right now, you can solve the long-term care issue once and for all with one check at one time. And I'm going to tell you exactly how to do it in this little video. So if you happen to be a boomer, and this issue is weighing heavily on you, and you don't want to see your granddaughter's $1 million inheritance go to nursing care because you didn't plan well, listen up to this because this is very important. Actually, we just had a client come to our office, one of the offices of the legacy companies that I had owned for 50 years, and they came to us to solve a problem. And one of the advisors at Legacy sat down and we gave them some advice. And they partnered up with the Legacy Insurance brokerage company to find the right product to solve their situation. This person had health issues. They weren't going to be able to qualify for insurance anyway. They solved this by using what's called a single deposit long-term care annuity certificate. Period. End of the story. Single deposit. What does that mean? You write one check. It's done. It's paid for. It's over. Long-term care annuity certificate. What does that mean? That means when you put the money in, if you die and you never use that long-term care money, it comes back to your family. This is really important. Unlike other insurance policies, like you pay a term insurance policy for years and then you drop it, you don't get any money back. You pay long-term care insurance for years, you never get sick, you don't get your money back. You pay insurance in your house for 20 years, right? Your house doesn't burn down, you don't get your money back. This is clearly the greatest money back guarantee in history for aging Americans. So, number one, you make a single deposit. In this guy's case, he had money in the bank, earning a little bit of interest, and he put it into the annuity contract, which earns a little bit of interest. Okay, fine. It costs a little bit, and maybe, instead of making 4%, he makes 2%. All right? That's not the end of the world. But here's the punchline. If he gets sick and goes into long-term care, that $300,000 pays $990,000. That's a huge amount of leverage. That means that his granddaughter's $660,000 isn't going to disappear, right? And it means that all the premiums he pays for long-term care insurance isn't going to disappear. It's a single deposit, one time, once and for all. Are they going to call up and raise the premium? No, they can't do that, right? If, in fact, you get it with a good quality company, this is the reason why I'd like you to use a great open brokerage company that can go to anybody. Folks like our sponsors, Legacy Insurance Broker, they will shop it and find the best company for you. You use a good quality company with a reasonable interest rate. Don't get focused on what the interest rate is going to be. The real payoff for these certificates is the money back guarantee at death, or the leverage, as we call it, to turn $300,000 into $900,000 of care, whether it's home care or nursing care. This can solve the long-term care stress in your financial plan in one stroke, in one check. And I will tell you, these certificates are not like getting a money managed account that you have to pay fees on every year. These certificates are bought directly from an insurance company, whether you buy it through a broker or through the insurance company. The price is the same. They pay the brokers in a traditional commission arrangement. Commissions, by the way, don't come out of you. They come from a company. When a product is sold, whether it's house insurance, car insurance, whatever, and it's a commissionable product, that money doesn't come out of your pocket. If you try to invest your way out of long-term care, every single year you're investing, a piece of your investment is going to your investment advisor. It can be a lot of money over a 20 or 30-year period. It's 30% of your money at 1% a year for 30 years. So keep in mind, these products have no upfront commissions that are charged to you. They have basically 100% refund if you die and you don't use the product. And if you do use the product, it will turn $300,000 into $900,000 of long-term care. This is a huge solution that can allow you to move on to other things. A lot of our grandparents, and I will tell you, it's one of the chapters in the book, that if you don't plan well, you become a grandparent skinflint, and you're trying to hold on to every penny because you think that you're going to have a healthcare incident someday, and you're going to have to use all of the dimes that you have to pay for that. So let's liberate some money. If we can take $300,000 from your savings, reposition that money into solving your long-term care issue, it can allow you the freedom to travel more, help educate your grandchildren, spend money on taking your family on that great vacation you always want to take. It liberates a whole bunch of your cash to do the things that are important in retirement, which is living. So I'm Paul Mauro. This is Smart Financial Lifestyles. There's a lot of things that we talk about that are fun and they're sexy and they're interesting. I know that this is a terrible topic, and we're trying to take this one terrible topic off the list of things you have to worry about. Reach out to us if you need help with this, or you need to be put in touch with one of these smart financial advisors that are associated with us. We're happy to do that. But for the time being, stay in touch with us. Follow our webinars online or some of our personal book signings that we're having in New England. And I'll see you again next time on Smart Financial. It's just the art of being smart.